Typically, when we're using short-term rental data, we blow that one-to-one ratio out of the water. That product was really originally designed for long-term rentals. So when we can show short-term rental data, it's easy to prove that ratio. So the other thing to mention, because the next thing I was going to say, this is the easiest loan that we do in the space because we're dealing with short-term rentals. From the borrower standpoint, you're not providing tax returns and business financials. It really is, we're pulling your credit. We want to see your bank statements, something to prove that you have that 12-month history as a landlord. And really from there, it's just finding the property that's going to cash flow for that one-to-one ratio.
Yeah, DSCR loans they're the quickest loan I've ever had process and the simplest loan I've ever had process. The 10% second home, that's another fantastic tool, especially if you're trying to jump in. A lot of these STRs, they were like a family's second home or third home, or, maybe didn't rent out themselves and it needs some love. So to be able to go in there with a low down payment, do some work, get it spruced up, get it into a cash flowing asset, that's another great avenue.